Hello, I'm David Krapf. I'm editor-in-chief of WorkBoat and WorkBoat.com. And this is another series of interviews we've been doing to try to keep people in touch with what's going on, because so many people are working out of their homes. And today we have Richard Sanchez, who's a senior marine analyst with IHS Markit in Houston. And Richard's also going to be coming from his home down in Pearland, which is a suburb of Houston. Richard also blogs for us occasionally. He wrote one a week ago talking about the basically the oil prices, how Gulf of Mexico. He can get into that. OSV demand is suffering. The new day rates are very hard to judge. He'll get into that, and we'll start right away with the first question. Richard, by the way, good to see you again.
Yeah, it's great to see you, Dave.
And the first one is, we wrote in our big cover story, which usually we did in conjunction with the OTC show, which of course was postponed this year in Houston. And we do our annual, every May, we do the annual OSV Gulf of Mexico wrap up. And this year we wrote about, the offshore community, particularly the OSV operators and drillers in the deepwater Gulf of Mexico. They entered 2020 fairly confident that a drilling recovery was in the making. And I heard a lot of that, and you probably heard a lot of that at the WorkBoat show. I hadn't heard confidence like that in a while. And only to be sucker punched early on by what we call, and people call a demand-sapping coronavirus pandemic and a global oil price feud. So can you comment on what's happened with those two things and how it's really affected the Gulf of Mexico?
Sure. There's been a huge retrenchment in terms of the investment in oil and gas. Initially, the operators started cutting their plans for 2020. This has hit the OSV market really hard this year. We've started to see the impact, I think, going into the third and fourth quarter. We're going to see significantly more reduction in activity, unfortunately. I've been watching the offshore rig count for jackups and floating rigs, and it's been getting whittled away. We stopped seeing any new fixtures for deep water rigs back in, I want to say it was February was the last fixture we had, and I think the last few fixtures we had for the shallow water were in March, and it was some really short jackup fixtures. But since then, we've actually been seeing some of the contracted drilling being cut back, canceled, suspended. We've seen a lot of projects go on hold. And the shallow water has really been the part that was hit the hardest, and activity there really pulled back very significantly. I was seeing in the last couple months, last 2 or 3 months, we've seen a lot of stacking of small OSVs. The vessels less than, say, like 3,000 deadweight tons got stacked really heavily. In fact, it might be a little bit harder to find those, but there's the other side is that there's not a lot of demand.
Right.
They've cut back significantly on how much activity is going on out there, and that's directly hit the number of vessel trips going back and forth carrying supplies. On the deep water side, we've also seen less activity, and although it hasn't cut back as sharply, the deep water plants tend to have a certain amount of momentum. But that being said, I think we're down to around, I want to say it's around like 18 contracted floaters.
Right.
Or actually it might be 20. Around 18 or 20 contracted floaters, but then the number of those that are actually drilling might be as low as 14. So a lot of those have gone on sort of reduced activity. Part of that initially has been due to COVID, where either they had issues getting crews out or there was issues with changing crews. But the main thing hitting the boat guys has really been just the pullback in activity. Tidewater recently in their conference call, they had a huge backlog of vessel demand, where they'd already contracted and they had plans to the end of 2020. Something like, I want to say they said that they lost something like $63 million in terms of contracted backlog that they would have reaped over 2020, but that those contracts were cut short or canceled. I suspect we're going to see more of that going into the end of the year. In terms of jackups, I think we're down to only one or maybe two active jackups out there on the shelf. And we're not really expecting a lot more activity to come up new. In terms of the drill ships, we still probably have around 14, 15 drill ships and semis out there working. A lot of those projects are continuing or some of those projects anyways are continuing forward. And but a lot of vessels have been turned loose, and big boats, even a few big boats have been tied up in the last couple months in order to save on costs, because they're anticipating there won't be much new demand.
What I'm wondering is there going to be an even more increased pickup in the number of bankruptcies out there? Now, on the driller side, one of the which I wrote about briefly was on Diamond Offshore Drilling. You know, and they're based right there, as you know, in Houston. Mm-hmm. They filed for bankruptcy protection in late April. They were hoping to, you know, like in every case, to restructure and strengthen their balance sheets, you know, achieve a more sustainable debt profile. And then Diamond Offshore has, last I saw, had a fleet of 15 floaters, 11 semis, and 4 drill ships. And then their president said that after careful, and I know a lot of these companies are doing it, after a careful and diligent review, they concluded that the best path forward for Diamond and its stakeholders is to seek Chapter 11 protection. And then on the OSV side, of course, the recent high profile is Hornbeck Offshore. Mm-hmm. And I was surprised that Hornbeck took so long, because their one of the big competitors, well, not as much anymore in the Gulf, was Tidewater. First Tidewater, as you know, merged with Gulfmark, and then they filed for bankruptcy, which really gives you an advantage over your other people, because they get to forgive a lot of debt. So I wanted to give you a comment is, do you see more bankruptcies coming also in the OSV and the drilling sector? And what do you feel about Hornbeck's filing?
I think it's actually really admirable that Hornbeck held off bankruptcy for so long, and were trying really hard to protect their investors as long as they could. They went through the 2014 downturn. I know that hit them really hard, and I think they were thinking they might be able to make it into the recovery, but unfortunately, 2020 with COVID-19, we saw an even worse crash in activity than in 2014. And I think they realized that going forward, there wouldn't be a path for them to sort of make it into back into sort of profitability in time to make all their covenants. I suspect we're going to see more bankruptcies here in the U.S. We don't have a lot of more big players to fall, really. There's Edison Schwest, but I'm not as concerned about bankruptcy with Edison Schwest. They're an integrated OSV company. They own a lot of the major offshore support bases here in the U.S. They have some major bases down there. They also have a lot of sort of
they also have tugs and
sort of feed in. Yeah, there's all the tugs.
Yeah, they're another.
But then there's a lot of other businesses that have like tank cleaning, and they provide quite a lot of services that often the operators can't do without. So I don't know. I don't know for sure what kind of position they're in, but I think that Edison Schwest is I think they're on solid ground. They've managed to hold on a huge amount of the market share, the U.S. Gulf and down in Brazil. They're huge deep water players. They've been, I don't know if everyone always appreciates it, but they've been very dominant. Before 2010, they were easily the most dominant deep water player, simply because they had bothered to make the investment, build these giant boats that the operators wanted. Is really after 2010 to 2013 or 14 that we started to see Hornbeck come in, Harvey come in, and then a bunch of other sort of smaller medium players were sort of also chunking in their new builds, and that really led to this huge surplus of vessels, so that they've been, since 2014, they really have been having a hard time paying down the debt on these boats. I mean, these boats, and we're talking about like the 300-foot PSVs, the new generation PSVs that were built within the last 10 years. These vessels have a price tag on them, I would say at the low end, probably like 45 to 55 million. I think for a 240 40 or 60 foot, I think you were still talking like 35 million. And those numbers, those large capital costs, is one of the things that make this downturn different from the 1985 downturn. In 1985, it was a lot easier to pay off your vessel. Well, I mean, as in you hadn't spent as much so it didn't, the time to actually to get all that capital back is a lot longer now. And the vessel owners are just having a difficult time paying on the debt. 2017, 2018, they were below operating costs. That's how bad the rates were. By 2019, we're seeing the rates starting to come back for the big PSVs. We're seeing the rates coming into the 15,000. And in the first quarter of 2020, we were seeing those big PSV rates come up to 15 to 20,000. And then we were expecting potentially more upward movement because we were thinking there was going to be a little bit of a recovery in activity in Latin America, like Guyana and here in the US Gulf. And then COVID hit. And now I imagine that I can't imagine they're higher than 15,000.
So
but I don't have a good firm, I'm having a hard time getting information on where the rates are since the COVID thing happened. In part because, I mean, everyone realizes we're in potentially like the worst downturn for oil and gas, I think ever. I honestly think this downturn is likely to be worse than a 1985 crash. When I look back, I've actually studied the 84, 85 crash quite a lot for offshore. And back then, what you had the market, and it was mostly shallow water. You had like over 100 jackups working. And then afterward, you might have had 70 or 80. So you still had a huge chunk of activity for them to work on and to continue to, to keep business going. But this time, now we're down to like 1 to 2 jackups.
Well, 1 to 2.
I think the projections we've heard is we think we're unlikely to see more than 9 to 15, going forward. When things started to get better for the shallow water, I want to say it was in 2019, we actually started to see a boost in shallow water activity. I think that might be that the rates have gotten so low that the guys working on the shelf were thinking, hey, this is actually worth going after. And at one point we had around 12 to 15 and we were like, woo, it's a big active market.
Yeah, Richard, speaking of the drillers, I mean, obviously the OSV operators rely on the drillers. That's their customers. So yeah. You probably saw that Jim had a column about that. Jim Redden, who's our energy analyst writer, talking about how the coronavirus is racking drillers. But the big point of his column was about Rystad Energy reported that 6 years of rig contracts had been canceled as of mid-April. They said, translating to approximately $400 million in contract value, which at the time Rystad said projected that that's only going to increase. So they say between 20 and 21, drilling contractors stand to lose an estimated $3 billion in revenue, as up to 10% of contract volumes are canceled because of COVID-19. And he also talked about OPEX, OPEX, operating expense levels in the months leading up to the coronavirus, but not enough to constitute any significant cost savings for E&Ps if they were to cancel and rehire a rig. But what are you seeing since that Rystad report? Are you seeing it getting worse with the cutting of the CapEx budgets and the loss of the
Yes. I mean, a lot of the CapEx budgets we heard cut, it was in the range of 20, 30%, as COVID started and we realized there was all this demand destruction going on. The real bad side for the OSV owners is that we're still seeing those cuts being implemented. Like we still have rigs on sort of, on the chart that show them as contracted. And I think some of those are likely not to go forward, or maybe they'll keep the rig on contract because they can't force majeure out of it and simply save money by not drilling. We saw that during the 2014 downturn when people had rigs under contract, they were still paying quite high dollar, but of course it was a lot more expensive to go ahead and drill those wells. So by simply holding off and waiting, so I think we're going to see more of that to the end of the year. I feel like when I look at the rig schedule, it looks like it's just going to keep getting whittled down. I was looking at the deep water schedule for the rest of this year here in the U.S. Gulf. I believe there's something like 4 or 5 more deep water rigs which are expected to come on schedule that are on schedule, like Chevron and BP, that have these rigs scheduled that are going to come on later. But no, I think we're getting 2. No, I'm sorry, we're getting 2 additions and we're losing 4 or 5. So by the end of the year, I think we're going to have on balance at least 3 fewer floating rigs under contract, and I think potentially more. And then if you check with the BSEE, they have reports that talk about how many rigs are active,
yeah.
which is kind of a closer count, and because I think they're actually talking directly with the rigs. And when we had this little weather event with one of the potential hurricanes coming through, I don't think it did anything, but we had a bit of a slowdown in work there, and so a lot of those rigs went idle. Although that's just temporary. Unfortunately, I think we're going to keep seeing a lot more pressure on day rates. The few vessel owners that I've been able to talk to have been telling me that these are big deep water boat owners. They're getting a lot of pressure to reduce their rates, and they're basically turning around and saying, "I can't go any lower. Like, I'm already as low as I can go." And I think they're being honest there, you know. But because there's so much supply available, the operators always want some sort of a discount.
Well, that segues well into my final question, Richard, which is back when we did our story in May, but also when I did the follow-up interview. This is with Matt Rigdon, who's the Chief Operating Officer of OSV operator Jackson Offshore Operators. He had said back then that I felt like I had a pretty good handle on 2020 activity a couple of weeks ago, but I just don't know right now. What I would have told you then is, as you know, based on what we saw through the course of 2019, and even at the beginning of this year, activity was increasing in deep water.
Mm-hmm.
But then he said, now I have no idea. We're just going and see what happens, coronavirus, everything that's happening. And then also he basically said the same thing in late April to me. So my question for you is, what does your crystal ball say? What can you say to these operators?
Sure. Well, we think 2021 will be better, but it's going to be better because 2020 will have been so bad.
Yeah.
So I think we're likely to see a little bit of improvements in activity in 2021, but that's really assuming that COVID-19 is going to sort of go away as a issue. I think a lot of us oil analysts are really worried at the thought of repeating waves, COVID-19, the potential for more shutdowns or more slowing of activity or the resumption of lockdowns. Like, all of this could have we'll say, 2021 could be even worse. You know what I mean? If we don't have the oil price there. And right now, the oil prices have been hovering, I think, in a relatively healthy place of around, it's like the high 20s, low 30s. Yeah. And when I say healthy, I mean, we have like 1 billion barrels of oil in storage, which have to be worked through. And so we almost need the market to be in a deficit for quite a long time. And one of the problems with oil prices is that as it starts to creep up, say above 30 or closer to 40, some of those onshore drillers are able to turn on the taps and go back into production. I think we saw reports of that just this month or last month, where we had certain weeks where the inventory build was increasing. That means either that the refineries are taking less or that they started pumping more, which I think they started pumping more. I've been listening to a lot of these little seminars that you can find around the web where they're talking to the shale contractors and the shale E&P companies, and they sound like they're ready to go back to activity as soon as the price is right.
Price goes
up. And for some of them, the price is close to being right because they're on some of their best fields are going to have the cost so low. So the real worry is, like, how long are we going to have the oil prices in this $30 to $40 range? A lot of analysts, it's sort of in the wider market I'm looking at, are thinking this is going to be there for quite a long time, unfortunately. Now, on the other side of that, when I talk to my guys at the big OSV companies who've been in the business for multiple downturns, they think it's going to come back really strong. They think we're going to see a sharp return to investment because the lack of investment has been so dramatic. I think there's something to be said there. So it's 2014. A lot of these, the sanctioning of projects has been sort of iffy. In 2019, there was a whole bunch of projects we were looking at that we globally that we thought would get sanctioned, and we're maybe on the cusp. And then going into 2019, it looks like the oil price is building, and we're going to get there. And then suddenly, the oil prices collapse, and none of those projects are on the table. And in fact, some of the ones that we thought were going to go forward have now been pulled.
So there's really OSV operators out there that are looking at a V-shaped rebound curve. Potentially,
and it's possible if the E&P companies have the money to spend, they'll get back into exploration and production if they see the oil price supporting it, and if they think the future oil price. But I think in order to get to that position, we have to work down this huge glut of oil that we still have, and I don't know when that could happen. If we end up, if we're able to get the global economies going again soon and quickly, then I think we could see a sharper recovery in the near term. Well, but the real concern is we're not in charge of what, you know what I mean, of how many people are getting sick or dying. I mean, those are the real tells of where it's going to go. But then it's also, how are the governments going to react? We have a lot of governments around the world who have not wanted to do much in terms of COVID, probably regret it, like down in Brazil, where there was where they've had, you know, fairly high number of cases, and they have a president who didn't think it was an issue, continued holding rallies. So I don't know. I'm really unsure. I feel like if the lack of activity and the lack of driving, I mean, what if it's true that we're in a whole new world and people aren't going to go to concerts and travel like they used to? At least in the near term, it definitely looks like that.
Well,
there's certainly a lot of fear.
I'll take your answer, Richard, as a positive, because it wasn't 100% negative. Well, that's about how much time we're out of time. But Richard, I want to thank you, and also we hope to see you at the WorkBoat show, December 15th. So
yeah, I would definitely love to go. I'm very eager to get out to some events, but of course, you know, we gotta listen to the medical people in terms of what's safe. Well, I'm actually quite hopeful, but unfortunately, I think we have some real dark days ahead for the offshore industry before we see an improvement.
Well, thanks, Richard, and I appreciate your time, and hopefully we will see you in December.
Thank you very much.